All right, so today we're going to be detectives. We're looking at this stock AZI, and man, is it sending some mixed signals. It's our job to dig through all the clues and figure out what the real story is here.
And here it is. This is the number that got our attention. 34.31% in one day. I mean, a jump like that, you have to ask, right? Is this the real deal, or is it just a flash in the pan? That's what we're here to figure out.
So, this really lays out the whole puzzle for us. You've got the good news, that huge one-day pop of over 34%. But then there's the bad news. The stock is still scraping the bottom right near its 52-week low. It's like a tale of two realities, and that's the mystery we need to unravel. Okay, so this is the big question, isn't it? After a whole year of just decline, you get this one massive jump. So what's the real story? Is this the start of something new? A real turnaround? Or is it just a dead cat bounce? You know, that temporary little hop before it continues its slide.
Well, to get to the bottom of this, we've got to look at the past. You know, every stock has a history, almost like a long-term memory. And that's where our investigation has to start.
Now, before we jump into the numbers, let's talk about a key tool we're going to use. It's called the Simple Moving Average, or SMA. Really, all it does is it smooths out all the crazy up and down price swings so we can see the actual underlying trend over a certain period, like, say, the last 50 or 200 days.
And boom, right away, the problem just jumps off the page. Look at this. The 200-day average price is almost $6. The 100-day is nearly $8. Even the 50-day is over $4. And the current price? It is way, way below all of them. This is our first major clue, and folks, it is a big one.
So the verdict from the past is pretty clear, right? It's not just a little bit negative. This thing has been in a severe, long-term downtrend. The history is telling a very bearish story. But that's not where our story ends.
All right, so let's shift gears. We've looked at the past, now let's look at what's happening right now. Because despite that really grim backstory, there are some fresh clues popping up that point in the exact opposite direction. We're talking evidence of a potential bullish reversal.
And one of the biggest pieces of new evidence comes from this indicator called the MACD. Basically, its whole job is to spot when a stock's momentum is changing. You can think of it like an early warning signal, that the trend might be about to U-turn.
Okay, so here's the argument for the bulls. Exhibit A. That MACD indicator we just talked about, it just flashed a buy signal. Exhibit B. That massive price jump wasn't on light trading. The volume was huge, which tells you there was real money and conviction behind it. On top of that, the price has punched through its recent short-term averages. And another indicator, the OBV, is showing that buyers are really starting to take control.
But wait, just when you think the case is closed, our detective story throws us a curveball. Yep. There are other clues hidden in the data, and these are telling us to maybe pump the brakes a little before we celebrate a win for the bulls.
So our first warning sign comes from something called the stochastic oscillator. Think of it like a speedometer for a stock's momentum. It tells us if the price has gone too far, too fast. If it gets too high, we call that overbought. Too low, and it's oversold.
Next up, we have Bollinger Bands. The easiest way to think about these is like the banks of a river. You have the stock price flowing down the middle, and these bands create a channel around it. When the river is calm, the banks are narrow. When it's volatile, they get wider. If the price breaks outside of those banks, well, that's a pretty big deal.
So here's the case for being cautious. First, that stochastic indicator, it's pretty much screaming overbought, which could mean this rally is running out of steam. Second, the price is shot clear above its upper Bollinger Band. It's outside the riverbanks, which suggests it's overextended. And we can't ignore the elephant in the room. That powerful long-term downtrend is still in charge. Oh, and one more thing. Another key indicator, the RSI, is basically just shrugging its shoulders. It's neutral.
Okay, so what are we supposed to make of all this? We have all this conflicting evidence. The long-term story is bad, but the short-term story looks good. Some clues point up, others are waving red flags. It's time to put all the evidence on the table and come up with a final verdict.
So after crunching all the numbers, after weighing all the evidence, the source material gives us this score, 36.04. And on their scale, that number lands smack dab in the middle. It's neutral. Not bullish, not bearish, just neutral.
So why neutral? Let's break it down. Step 1. You've got this incredible powerful burst of life in the short term, no denying it. But step 2, you also have these really clear warning signs that it's gone too far, too fast. So, step 3, you have a classic tug of war. The bulls and the bears are locked in a stalemate. Neither side is in control. And that leads to the final takeaway. The smartest move is to wait for more proof. We need to see who wins this fight.
And that leads us perfectly to the final recommendation from the analysis. I'm just going to read the quote because it says it all. Investors should be cautious and look for confirmation of a trend reversal before considering a long position. In other words, our detective story isn't over. The case is still open, and we need more evidence before we can close the book.
So I'm going to leave you with a question to chew on. You've seen all the evidence now, the good, the bad, the totally conflicting. So what about you? What single piece of evidence would it take to convince you that this trend has really, truly changed? Would you need to see it break above that big 200-day average? Or would a few more days of heavy buying do it for you? It's a really interesting puzzle, and there's no single right answer.